Hey, what's up guys, it's Jonathan here. The Consumer Price Index report for December 2021 just came out. And for 2021, we got a record inflation rate. So in this video, we're going to do a quick breakdown of the report and some of the reactions that we got from the Fed and the market concerning the report. So let's get right into it. Before the release, the expectation was that inflation would rise 0.4% for the month and then 7% for the year. That 7% is the highest reading that we've got in the past 40 years, and a 0.5% increase for the month of December, which is 0.1% more than we were expecting. When it comes to core inflation is very similar to CPI, but they removed the volatile sectors like food and energy. For the month of December, core inflation rise 0.6%. For 2021, it rise 5.5%, which is the largest reading that we've gotten since 1991. One of the key components that really impacted inflation this month was shelter. Shelter makes up about a third of the weight of the CPI reading. It rose 0.4% in the month of December, and rents in 2021 rose 4.2%. But this category is expected to run even more in 2022 to catch up for the increase in housing prices. There's about a 12 to 18 month lag between housing appreciation and rent appreciation. Another component that had a really big impact in the inflation reading was cars. And cars make up about 8% rate in the CPI. Used cars were up a whopping 37% year over year. And in December, it was up about 3.5%. Whereas new cars were up 11% year over year, or a little over 1% for the month of December. Another big component of the CPI reading was food costs. Currently, food costs make up about 14% of the CPI weight, and it climbed about 0.5% in the month of December and 6% for the year. And the rising cost of food is mostly driven by the cost of meat. For the year, bacon is up 19%, while steaks are up 21% year over year. We have started to see these prices start to inflect and move to the downside, with food at elementary and secondary schools going down 12% in the month of December alone. Another big player in the CPI reading was energy costs. And this was a key driver of inflation all throughout 2021, as gas was up almost 50% year over year. But gas, just like foods, did start to inflect to the downside, and it fell about 2% in the month of December. We also saw wage inflation as well. Inflation adjusted earnings increased 0.1% in December, which is the first increase we've seen past 3 months. So this report came out early Wednesday morning. The market responded pretty favorably to this news. The S&P 500 ran about 0.5% off this news. It did fall in the trading hours, but overall for the day it was up a little over 0.25%. I think this was mostly because we got numbers that were at expectations. It did give the market some reassurance. Tech stocks and crypto did pretty well today, too. Tesla was up almost 4% for the day, while Bitcoin jumped 1.5% on news. When it comes to Fed funds futures, it's still expecting that we're going to have 3 rate hikes in 2022, with one in March, one in July, and another one in September. And we even got word from one of the FOMC voting members, Cleveland Fed Chair Loretta Mester, that she believes that there will be 3 rate hikes in 2022. She also believes that the numbers that we got on the CPI report sets the stage for a rate hike in March, which is also along market expectations as well. When it comes to the Fed balance sheet runoff, she goes on to state that she hopes that the Federal Reserve will run off the balance sheet as quickly as possible, and that they should start as soon as the first rate hike. So we may see runoff begin in March if we see the first interest rate hike then. So when it comes to CPI expectations, the market expects a 3% CPI reading for 2022. Even though this is completely doable, it's going to be dependent on a couple different factors. The first factor would be the supply chain. We still have quite a bit of a lag between supply and demand as people continue to replenish their savings. Add that to supply chains starting to normalize more. That'll play a huge part in us reaching that 3% expectation. Another thing we gotta watch out for is energy prices. We gotta start seeing energy prices start to deflect to the downside before we have the possibility of seeing CPI start to deflect to the downside as well, given that energy prices are one of the biggest drivers of the CPI. One of the things we gotta watch out for is rent. There is about a 12 to 18 month lag between housing price appreciation and rent appreciation. We'll most likely see inflation and rents take off this year, But if they take off too much, then that will probably affect our ability to get that 3% CPI read-in. The other thing we gotta watch out for is wage growth. This plays into the supply chain issue as well. For us to see wage inflation start to simmer down, and I know most people don't like to hear that, but the problem is that if you have everyone's wages going up, it's going to force the price of everything up as well. Yes, we do have an unemployment rate that's under 4%. That doesn't necessarily tell the entire story. Because what you also have to consider is the unemployment rate only includes people who are actively looking for a job. People who are sitting on the sidelines not looking for a job, it doesn't include them into the unemployment numbers. So like I said, as people start to replenish their savings and there's not as much stimulus, we may start to see more people return back to work. One of the other factors we need to watch out for is COVID. That's kind of an ongoing situation. We're all kind of hoping that this is kind of the end of it, but we'll have to see. Overall, I think the CPI reading was really a good thing for the markets. It gave a lot of reassurance to people that even though inflation is high, it's not necessarily significantly above expectations. I'd like to thank you guys for watching. If you like this video, please hit the like button for YouTube algorithm. It greatly helps out the channel, helps push this video out to as many people as possible. Also, while you're down there, I checked my analytics recently and 87% of you guys are not subscribed to the channel. So what are you doing? If you made it this far in the video, you'll probably like my other videos. So hit the subscribe button and notification bell to get notified anytime I post a new video. Also, what do you guys think about the CPI reading that we got? Let me know in the comment section down below. I'd love to hear from you guys. And also check me out on all my social medias. I try to post there every day. And thank you so much for watching. I'll see you in the next video.